While it's only springtime in Minnesota, the real estate market has already been red hot. And if you're selling your home or you're a homeowner tracking your home's value, you've been really happy this year. If you're a home buyer, you probably haven't been as happy. No, do keep the hope though, because this is one of the markets in which homeowners will have the most affordable housing payment based on the low level of interest rates. So do keep hope. Recently, the National Association of Realtors released a statistic that from March of 2020 to March of 2021, the average homeowner saw their property value increase by about 17%. 17%! That is double-digit appreciation in 1 year. It's pretty phenomenal to have real estate in your portfolio. And if you don't, let us help you make that happen. So, with all of these crazy prices driving this market, I get asked all the time, is this the best time to be buying? Should I wait until the fall when prices are a little lower? Should I wait until the housing crash that's bound to happen at some point? Well, I think it's still the best time to buy a home. And I'm going to tell you 4 reasons why I don't think a crash is coming, why a bubble isn't imminent, and why we're going to see some good home sales and appreciation here in the Twin Cities for probably a little while to come. So reason number 1, inventory is low. We all know this. There's multiple offers on pretty much every listing. So we all are knowing that the inventory levels are low. Well, what's driving this? Couple of things. This past year, obviously, we went through the whole pandemic, and people realigned values on their life, on their family, on their lifestyles, and the home has become of utmost importance. So there's a lot more people that went through quarantines and hated the place that they were living more than ever and wanted desperately to get something better. That, plus we have the pandemic babies starting to be born. So in my own family, amongst my siblings, I have 3 pandemic babies. So I know that it's common right now and it's happening. And really, babies, births, marriages, those kinds of things drive home values and the housing market. So number 2 is new construction has been going crazy, and really was crazy before the pandemic. And then the pandemic happened and builders ran into supply chain issues. They were closed. They couldn't operate their businesses, their workers couldn't, go out, etc., from state orders. So we've got this huge demand in the new construction industry and this delay. So we're going to be dealing with the new construction prices for some time. Even though lumber is at a very high level, I've talked to many builders who have said, even when lumber comes down, building prices really aren't going to change, because so much about how they have to operate their business now has changed as a result of what we've gone through. So new construction is crazy high, and a lot of the houses that are going under contract aren't even starting for 6 months or a year. So the high values will continue into next spring and beyond, and it'll take a while for us to get through that absorption. The third reason I think that we're not going to be facing a bubble is lending requirements are a ton stricter now than they were in the late 2000s. So I happened to be working in the industry then. I worked for a small community bank where every loan that I gave out to clients, we serviced after closing. So fortunately, we didn't have any weird products like, no income, no asset type qualification loans that were being done in the market. Now, if you want to do something a little bit outside of the normal, you need a lot more skin in the game. Even if you're a first-time home buyer, you can't get the seller to cover your closing costs anymore. The minimal down payment options aren't really running or working as well as they used to, unless you have very good credit. So the lending has gotten tighter. The Treasury just gave guidance to Fannie and Freddie that they are not allowed to originate more than 7%, I believe, of their portfolio for second homes and investment properties. And there's a huge demand for second homes and investment properties right now. So things like this is the credit requirements are tightening. The money is tightening, and it's harder to get into real estate than it was in the late 2000s. So we have better borrowers now, perceivably, or better equity positions for lenders where they won't be in such a tough shape if they do have to take a property back. The last and final reason, something that I go through at every pre-approval meeting with my clients, is a buy versus rent comparison, especially for our first-time home buyers. So in many markets in the Twin Cities, rents are going up by 5% per year. So if you think about that, and on a standard 30-year fix, you can get a rate of about half of that. It's kind of a no-brainer, right? Like if you're renting a house and every year the rent's going to go up by 5% and you can lock into something at half of that percent, it just makes so much sense to buy a house that I think as rental rates continue to go up, it's going to encourage more people to move from the rental market into home ownership and be able to afford those higher levels of pricing. So those are just 4 reasons why I don't think that we're facing a housing bubble this year in the Twin Cities market. Again, this is my opinion. This is based on 20 years of experience. We are helping clients every day get their offers accepted in this crazy market. We just had one yesterday. Our offer was accepted out of 30 different offers. So if you need a lender and a realtor team that will help you win in this market to take advantage of having real estate in your portfolio, give us a call. We're here to help, and we want to make it happen for you.